Right now, as you're watching this video, $2 trillion in dirty money is being cleaned. Not in some dark alley, not in secret underground bunkers, but in plain sight, using the same banks you and I use every single day. $2 trillion. And here's the terrifying part. Most of it will never be caught. By the end of this video, you'll understand exactly how criminals turn blood money into luxury penthouses, and why the system designed to stop them is actually helping them succeed. But first, let me show you something that'll change how you see every dollar bill. Imagine you just made $1 million, but there's a problem. You made it selling drugs, or from ransomware attacks, or human trafficking. Doesn't matter. The point is, you can't spend it. Walk into a Mercedes dealership with a duffel bag full of cash? The FBI is at your door by Tuesday. Try to deposit it? Banks will freeze your account faster than you can say money laundering. So, what do? You clean it. You make that dirty money look legitimate. That's money laundering. And it's a $300 billion a year industry in the US alone. Think about that. Criminals are running an operation as large as the American military, and they're winning. But here's what's really insane. Money laundering works in 3 stages, and once you see them, you'll spot them everywhere. Stage 1 is called placement. This is where criminals take physical cash, drugs money, extortion payments, whatever, and inject it into the legitimate financial system. Here's the genius part. They use businesses that handle massive amounts of cash. Laundromats, car washes, casinos. In 2023, the Treasury Department flagged over 47,000 suspicious casino transactions. Why casinos? Simple. Walk in with 50 grand in dirty cash, gamble for an hour, cash out with 48 grand in clean chips. You just paid a $2,000 fee to legitimize blood money. The casino gets their cut, you get a receipt. Everyone's happy. Except, society. But wait, it gets better. Or worse, depending on how you look at it. Stage 2, layering. This is where criminals make the money impossible to trace. They move it through dozens, sometimes hundreds of transactions. Shell companies in Delaware buying real estate in Miami, which is then sold to another shell company in Nevada, which wires the money to a cryptocurrency exchange in Estonia, which converts it to Tether, which gets sent to an account in the Cayman Islands. Each transaction creates another layer of confusion. It's like a shell game played across 50 countries simultaneously. And here's the kicker. It's getting easier. In 2024, over 70% of money laundering operations used cryptocurrency at some point in the process. Bitcoin, Ethereum, privacy coins like Monero, they're not just for tech bros anymore. They're the money launderer's best friend. Before we get to stage 3, I need to ask you something. Have you seen our video on how Airbnb destroyed Europe's cities? Because money laundering and real estate manipulation are more connected than you think. Links in the description. And trust me, after you watch this video, that one's going to blow your mind even more. Stage 3, integration. This is the finish line. The money has been placed, layered, and now it's coming back to the criminal, looking completely legitimate. They buy luxury cars, penthouses in Manhattan, art collections, restaurants. In Miami alone, experts estimate that over $20 billion in laundered money flows through the real estate market every single year. Here's a real example of how all 3 stages work together. Remember that dirty cash from stage 1? After you ran it through casinos and crypto exchanges in stage 2, it's now sitting in bank accounts under shell company names. Now comes the magic. You create an LLC in Wyoming for $150. No questions asked. Wyoming doesn't require you to disclose beneficial ownership. That LLC, funded by your now layered money, buys a condo in New York for $5 million. Not with a duffel bag of cash, but with a wire transfer from a seemingly legitimate business account. No mortgage, minimal background checks on the company. 2 years later, you sell it for $7 million. Congratulations, you just made $2 million in legitimate real estate profits. The IRS sees a successful investor. The FBI sees a legal business transaction. You see clean money that's completely disconnected from its criminal origins. And this is happening thousands of times a day. Let me tell you about Danske Bank. Between 2007 and 2015, this respectable Danish bank processed over $200 billion in suspicious transactions through their Estonian branch. That's not a money laundering operation. That's a money laundering empire. Russian oligarchs, corrupt politicians, organized crime syndicates, they all used Danske Bank like it was their personal ATM. When investigators finally caught on, they found that 80% of the bank's Estonian customers were non-residents. Translation? Shell companies and criminals. Or take the FinCEN files from 2020. Over $2 trillion in transactions were flagged as suspicious, yet many still went through the financial system. Financial institutions file suspicious activity reports with regulators when they detect unusual transactions, but filing does not automatically block the money. Unless authorities investigate and intervene, these funds can continue to move legally, despite being flagged for potential links to crime or corruption. And that's what really keeps me up at night. Banks are supposed to stop this. They have entire departments dedicated to AML, anti-money laundering compliance. They use AI, machine learning, sophisticated algorithms designed to spot suspicious patterns. But here's the problem. Filing a report doesn't stop the transaction. Banks report the suspicious activity to the government and then complete the transfer anyway. It's like calling 911 to report a robbery, but then helping the robber load the van while you wait for police. The system is designed to document crime, not prevent it. Plus, the penalties are a joke. The average money laundering fine for major banks is around $2 billion. That sounds massive until you realize these institutions move trillions every year. It's like fining a billionaire $50 for speeding. Sure, it's technically a punishment, but does it change behavior? Absolutely not. Here's what nobody wants to admit. Our economy might actually depend on money laundering. Think about it. $2 trillion in dirty money flowing through the system every year. That's supporting real estate prices in major cities. That's propping up luxury brands, casinos, cryptocurrency exchanges. Remove that money overnight, and you'd crash markets worldwide. The uncomfortable truth is that money laundering isn't a bug in the system. It's a feature. It's not something happening to our financial system. It's something our financial system enables, profits from, and arguably requires to function at current levels. So the next time you see a luxury condo building going up in your city, or a businessman paying cash for a Lamborghini, or a shell company buying up properties in your neighborhood, ask yourself, where did that money really come from? Because chances are someone, somewhere, decided not to ask that question. And that's how $2 trillion disappears in plain sight every single year. If this video opened your eyes, subscribe to this channel. We're digging into the systems that shape our world, the ones everyone sees but nobody questions. Next week, we're exposing how credit card companies legally steal from you. You won't want to miss it.